afternoon, happy Friday, and happy Cinco de Mayo, everyone. I'm Paul Anderson with Primary Residential Mortgage, and I guess it's rainy Boise, Idaho today. You can't ever figure out the weather around here. What we're going to talk about today is the impact of the recent federal funds rate increase and how that affects both buyers and sellers of real estate. So, as many of you probably know, the Federal Reserve raised interest rates for the 10th time in their last 10 meetings. On Fed Chairman Jerome Powell announced a quarter-point increase to the Fed funds rate on Wednesday, and this is identical to his increases, or the central bank's increases that they implemented in both February and March this year. But with this recent increase, it is expected that this is the peak rate for this inflationary cycle. Hopefully that'll allow all of us to breathe a sigh of relief. I do expect we're going to see mortgage rates start to drift down over the course of the year as our overall economy slows and we move closer to what we hope is the Fed's beginning to lower the overall or the overnight rate beginning in 2024, as the financial market volatility finally begins to settle down. But these rate hikes were initially aimed at cooling an economy that was absolutely on fire after rebounding from the coronavirus recession that we had in 2020. And that dramatic recovery, it included a red-hot housing market. So we had record high home prices, record appreciation, and we had very small levels of inventory. Now, up until February of this year, the housing market had really cooled. Any of you in and around the Treasure Valley know home sales dropped sharply, appreciation slowed not only locally but nationally, and home prices dropped more significantly in many of the previously overheated markets such as Boise. Home prices are not driven solely by interest rates. However, it's a major factor in housing affordability, and it greatly impacts what a borrower can afford. If they can't afford to buy it, then you've got to sell it. You've got to make some concessions. Higher rates are challenging both home buyers who've seen, they have to cope with these higher monthly payments, and as I mentioned, sellers who have less demand for their home. Now, rates got as high as 7% last fall, and they've dropped back down. Matter of fact, middle of this week, we were seeing rates in the mid 6% range. And overall, guys, as home prices continue to stabilize and mortgage rates fall, housing affordability is going to improve for home buyers. Home prices declined for 7 straight months before rising ever so slightly in February and then again in March. And this is according to Case-Shiller. So, with all this in mind, we should expect to see mortgage rates come down and decline throughout the remainder of the year. And that's going to help increase housing affordability and make it easier for families to purchase their new home. So if you've been waiting to see what the market will do, your patience may be paying off very soon. Again, I'm Paul Anderson with Primary Residential Mortgage. If you have any questions, you want to know about what's going on in the economy, what's going on with housing, with interest rates, reach out to me. I'm always happy to help. Shoot me a message. I'll get back to you. Hope you guys have an awesome Cinco de Mayo and a great weekend, everyone.